Are the big tech companies playing accounting gimmicks to increase or show positive earnings? Folks, we have a potential accounting scandal on our hands, but maybe it's just ordinary business. Let's talk about this with Mr. Dan Bird. And never forget, I was an accountant right out of college for 2 years for a Fortune 500 company. So I know exactly what they are doing. And I told you years ago, you can manage numbers just like this. No more revenue, but shoot, more profit. Let's talk about it, Mr. Dan Bird. What's going
There's
on? Are they playing
there's
games?
one number there's one number that's a lot harder to manage, and
Revenue.
that's free cash. No, revenue
No,
is
free. Yeah, you can fake
cash
revenue.
flow.
Free cash
Free
flow.
cash
True.
flow.
Yeah. Yeah.
That's the one you need to look at.
Yeah. Well, I think there is, I think Michael Burry was first, or at least most publicly here in the last 10 days or so, talks about this accounting gimmick that really had meaningful impact on earnings. And as we know, or at least as most of us know, earnings are a key component of PE, which drives stock price. So
Mhm.
some of these big players have had impressive earnings per share growth, but it's just an accounting game. What say you?
I think part of that's probably true, but it's not the kind of thing that's not going to show up right away. I mean, it's not going to impact anything right away. It's only when the cracks start to appear eventually that the whole thing begins to crumble. But until then, and as long as people are still buying the AI story, and they're still building data centers, and they're still buying NVIDIA chips, as long as that continues, then those gimmicks can hide what's going on under the covers,
Well, let's
and
talk
and
about the
and maybe even delay the time when the reckoning comes.
yeah.
Now, next week we've got NVIDIA, and that's going to be a really interesting earnings, I think, because I think they'll beat earnings and revenue, but their forward guidance, I think, is
It's
going
all
to
about
be
the guidance. You think
right.
it'll be weak?
I think it'll be weak.
Really? Oh, oh, that will
Just
be
my
that's on
just
red.
my opinion.
Yeah, yeah, it's one
I mean,
person's guess. Yeah.
right.
Well, let's talk about the accounting gimmick because again, as someone who sat in boardrooms and made decisions like this, I could always impact earnings per share. I could sometimes impact revenue just by making legitimate accounting decisions. And again, these are legitimate. These will not be caught by big five accounting firms. These will probably be put somewhere in the footnotes. Um, but I'll let you go
It'll be
first.
put
What,
at
what?
the very end of the earnings statement, and it's not something that's illegal
Oh, it's not
necessarily.
illegal. Absolutely not illegal.
It's just something called non-GAAP special situations.
Yeah.
But
So
the,
why don't
the
you
the
outline
problem
what
is the problem is that more and more companies are having this special situations every single quarter.
and they're actually there's been multiple companies who have done it multiple times. So let's
Right.
talk about what you understand it to be, and then I'll come over the top with what I see.
All right. Well, to do that, let me, because I just finished this article,
Nice.
um, let me share my screen first. And this article is in my newsletter. So can you see that?
I can.
All right. So I encourage anybody that wants to learn more about it to click on this little box. Breakpointtrading.net is my site. My YouTube channel button is right in the upper right there. This is the newsletter. I encourage anybody to, especially this week, should
Yeah.
read it. Oh, you know what? This is last week's. Oh, sorry.
It's okay.
Sorry. I need to refresh my screen. Get this.
You just finished.
Yeah, hold on. Try that again. There we go. 14th. This cartoon was great, I think. Is this mushroom edible? AI says yes. Rest in peace. You're right. That mushroom was poisonous. I'm sorry for the confusion. Would you like to learn more about poisonous mushrooms? That's AI. And then this one, we can talk about this one today too.
Hmm.
Banks now requiring your grandkids to co-sign for your 50-year mortgage.
I saw that. That was a good one.
Yeah, that was pretty good. All right. So, what I want to point out here is at the end of my newsletter every week, here's the Buffett indicator, by the way.
Hmm.
Um, I put in a link to this guy. this guy here, Real Investment Advice. It's free. Anybody can sign up, and I encourage anybody that's interested should sign up as well. I put the link to the full article right here, and then I put an excerpt. The excerpt that I put is regarding the market.
Mm-hmm.
It's not regarding the topic. So to get the topic,
Mm-hmm.
EBITDA and warnings of Charlie Munger, who he said that EBITDA was BS.
Yeah, I remember that talk.
Right.
That was decades
But
ago, but yeah, it's a good one.
but this article right here, actually, I have it right here. So talking about the whole thing, here's Michael Burry about what he talked about, AI bubble. Apply the same logic to CoreWeave. First thing to understand is that net income is an accounting number. It is not the amount of cash that the company actually earns because it reflects certain approximations. One of the
Mm-hmm.
most important is depreciation,
Yes, sir.
right? Good
Mm-hmm.
example is CoreWeave. Adjusted EBITDA more than doubled. On the surface, then you think they were profitable, but they backed out $630 billion in depreciation and amortization from GAAP with a net loss of 110 million. So CoreWeave has burned nearly $5 billion so far this year.
Yep.
This is one of the ones that went up dramatically because they're involved with the picks and shovels of data centers for
Mm-hmm.
AI.
For sure. Yeah, they're in. I mean, when you look at that weave of money just flying around, big companies, Oracle, Nvidia, CoreWeave is always in the mix. Yep.
Right. So this whole article is really good. This earnings are not what you think. It's a house of cards.
Ooh.
Um, just what we were just talking about. This is important right here. The gap between operating and GAAP earnings.
That is a massive.
Right. That's the gap. So basically, and companies are doing this now every quarter. It used to be only maybe 60 or 70% of companies would do these non-GAAP earning things.
Yeah.
Now it's over 90% will do it.
Well, it's really interesting because again, this is 4 decades ago, or maybe 3 decades ago when I was in the boardrooms making these decisions. And there's
Mm-hmm.
always 3 or 4 levels we could pull that would directly impact, um, EPS. And it
Right.
was depreciations, it was revenue recognition. It was always these things that we could play with, and they're not, again, not illegal, but they are a house of cards.
Right. Yeah. And as more and more companies do it,
Hmm.
it it becomes a house of dominoes.
Yeah, this is how this goes. One of these companies get caught with their shirt, their pants down, and everybody will be guilty until proven innocent. And
Right.
that day could come.
So this is what he says right here. Where to look instead: free cash flow,
Yep, exactly.
operating cash minus capital expenditures. It's one of the
There
most
you go.
important things to look at.
That's the oxygen of a building. I mean, because again, you think about the income statement, the balance sheet, none of the, I mean, everybody talks about them, net worth, how much you make. It's the cash flow statement. That's the lifeblood of a company. You can go
Yep.
broke. You can go broke selling lots of stuff. You can go broke making money, at least
Yes.
accounting wise.
Exactly.
It's the cash flow
And
that
so somewhere in here they talk about back what, like you said, 3 decades ago, it was only 70 or 80% that you might
yeah.
find this, and now it's like 97% of companies are doing this.
Yeah, but let me give you a real example of what these folks are doing. So, and this is from my reading of multiple articles, and we'll just take a single server as an example. Let's say you buy a server. You just say you buy a box or you buy a car. Let's just say you buy a car, and the
Hmm.
car costs 100 grand,
Right.
and you cut a check for the 100 grand, so you pay for it cash. And I'm thinking as a business right now, so that's a capital expense, and the car is only used for business. And for whatever reason, you say that car has a 5-year lifespan. That
Right.
means in accounting speak, you're going to be writing off $20,000 each year for the next 5 years, right? It's
Right.
just straight line, 2020, 2020.
Yeah.
However, if for some reason, and oh, by the way, the 20 that you're writing off will impact earnings per share because it's a cost, it's an expense.
Hmm.
If instead you say that car now goes from a 5-year life to a 10-year life, you're only writing off 10 grand for 10 years instead of
Right.
20 for 5 years because you write off the whole thing over the useful life. Just by doubling the time, you've cut the expenses in half, and bingo bango, your earnings per share looks stronger because your expense is half as much. Now, do this to the tunes of hundreds of millions, if not billions of dollars,
Yeah.
and you really can dramatically impact EPS. And that's what
Yeah.
these, people are pointing at. The tech companies, I mean, you can look at it. There are charts out there on the internet that talks about, I think it was a decade ago, they were assuming server life was 3 years, and now many companies are saying it's 6 years. Now, think about that, folks. Just ask yourself logically. When NVIDIA comes out with a new chip every 18 months, and you see all these people just going after the latest chip, which I think is Blackwell, what
Hmm.
does that mean for the older chips? Do you think the older chips get more valuable or less valuable? I mean, just ask yourself intelligent questions like that. It's an argument I'd have a problem with.
Right. Right. And as long as the growth is there, as long as that growth continues,
Well, you can hide it, but not
they can
forever.
continue to hide it. And that's what I was saying. It kicks it down the road. At
Yeah,
some point, at some
it's gonna
point,
come out like this grizzly bear eventually.
right. And when one of them starts failing for this reason,
Yeah, they
then
all
they
go.
all of them will be looked at.
Correct.
So
And they will, and not only be looked at, they will be assumed to be guilty, not
right,
innocent.
right.
It'll flip overnight.
Yeah. So when will that flip? How long do we have?
I don't know. You never know. The market could be irrational longer than I could be liquid.
Yeah. I posted that on LinkedIn last week. It said the
That's good.
longer than you can stay solid.
Solvent, yeah, liquid solid. Yeah, there you go.
Yep, exactly
Well,
right.
this is going to be
And
interesting. I
that
don't
and that
think.
was related. That was related to Michael Burry shutting down his fund. By the
Yeah,
way,
he gave up. I'm done. I'm out.
he's trying to short the market. The market can stay irrational longer than you can stay solvent. That's a perfect example.
Well, you saw. I'm sure you read the letter, right? He wrote a very simple
Yeah,
letter. Basically, the letter says, "I haven't understood this market in a long time. I'm out." That's basically what it said.
yeah, that's right.
Crazy. Well, again, I don't think there's any questions. Again, none of these folks are doing anything illegal. It's not going to send anybody to jail, but it's certainly something you should question. Are these earnings per share growth as impressive as you might think they are on the surface if you don't understand these gap accounting tweets? Um, but something else I thought was interesting next week, Dan, is we get a jobs number. We're getting a jobs number on Thursday. Did you see that?
On Thursday,
Yeah, Thursday, I think. Yeah. Yep, pretty sure.
I did not see that.
Yep, the jobs number
Yeah,
is coming.
that's the day after Nvidia. That's the morning after Nvidia's
Cor-
earnings.
Correct, the morning. It'll be 5:30 a.m.
That's
Pacific.
like a double barrel catalyst.
Yeah, again, folks, if you don't recall, the BLS, the last time it was reported, and again, it's been delayed. We missed one full month. We're now going to get the following month. The last full month reported was a positive 22,000 and an unemployment rate of 4.3. I think, Dan, we might see 4.5.
That's what I said last week.
Yeah, I think we might see it.
We might see 4.5 on the next one. And that's not going to make the market happy. And it might cause the Fed to cut by 50, but they'll be cutting for the wrong reasons.
Yeah,
So it's
yeah.
not going to be a cut that the market's going to be happy about.
No, it's you got to be careful what you wish for sometimes in this game, and getting a 50 on the back of a weaker labor market is not what you want.
When will when will CPI? CPI didn't get reported
They
last.
haven't reported that yet. I read just this morning. The only number that they're ready to give us next week is BLS. I'm guessing CPI is the following week, but that's just a pure guess.
Um, so the following week is Thanksgiving week,
Mm-hmm.
and then the
Correct.
week after that is the next jobs number,
Probably. Yeah, you're right. Probably.
December 5th.
It should be. Yes.
Right. Yeah. Yeah. Very interesting. I mean, one interesting thing. There are a lot of really good things in this article,
Mhm.
but one of the things they actually mentioned this twice. Uh, Must assuredly leap into action. The SEC will leap into action and pass new regulations to rectify this reckless misbehavior after the next crash.
Oh, that's so funny and so true.
You're not going to know. You're not going to have advanced warnings unless you're watching this channel, of course.
Yeah, it is funny to think
So,
about. Yeah, we're pointing at this, fast forward, bingo, bango, 18 months, whatever it is. The SEC comes out with the rule, says, thou shall not, blah, blah,
right.
blah. Yeah.
Yeah. After the market's down 35, 40%.
Oh, that's funny. That's good job, SEC.
Yep.
That's funny.
Unbelievable.
Yeah. Well, let's talk
So,
more about it. NVIDIA. Let's get into you can stop sharing for a minute. I just want to talk to you. I want to talk about NVIDIA because again, I don't think there's any question they will beat earnings. But again, it's all about that forward expectation, right? And it's going to be interesting what they have to say, I think.
So I'm kind of my opinion, and it's just an opinion. I don't have any, nobody knows for sure. I mean, I don't have any data that they're going to have weak guidance, but my opinion in listening to um, Jensen Wang lately, he just sounds like he's whining lately on a lot of his interviews. He's coming up with excuses of why, chips aren't moving, or the market's slowing, or, China is doing this, or they're not buying our chips, they're making their own chips now.
Right.
He just sounds like he's whining. I think he's trying to set things up for a disappointment next week.
Yeah, I mean that certainly could be it. Or he could stop. Or the other thing he could be doing is just tempering white hot expectations. I mean, can you imagine? This is to me. This reminds me so much of Cisco systems back in the day when they were like the backbone
Right.
of the
Yeah.
internet blowout. It was the
Yeah.
same thing. It's just a
Yeah.
different widget.
It is. It's the picks and shovels. Yeah.
It's picks and shovels, baby, picks and shovels, and it's it's going to be interesting. Uh, Again, I don't think there's any question they beat what the expectations are, but it's so much about the expectations. And I thought I saw a post the other day, it might have been a month ago, where like they can see revenue through 2027.
Right.
That's wild. That's not usually how tech companies roll. They don't have
Right.
revenue to 2027.
Yeah. Yeah. They can see that now, but that doesn't mean it'll stay there.
No, it could disappear. Absolutely. Absolutely could disappear
And
overnight.
more companies are either partnering with or actually trying to create their own chips.
Well, you saw that AMD now says they're roughly 10% of the market, which means Nvidia is 90%.
Right.
But I'd be willing to put money down that Nvidia won't be 90% of the market in 2 years, right? There'll be
No,
something
I
less
don't
than
think
that.
it, I don't think so either. That's how markets work.
Of course,
Um, but also companies like Meta and I'm trying to think of the other one,
it's got to be Google.
partnering with Broadcom
Oh
to,
yeah, yeah, yeah.
to
Broadcom,
create
yeah.
to create a chip to compete with Nvidia.
Yeah, it's coming. I mean, that's just how. I mean, that's the same thing with Cisco, right? Cisco was the king, then came 3Com and Juniper, and all of these
Right.
other players, and it will come for Nvidia. And that's not. I mean, let's be clear. Just because Nvidia is not 90% of the market in 2 years doesn't mean they're not bigger, right? The
Right.
pie could grow,
Yeah.
right? They could be 80% and still double, right? It's possible. Um, we'll see.
Did you happen to see the article about the the one of the key AI gurus that Meta hired? He resigned. He's going off to start his own startup. And he said the model that all of these companies are using, the large language model that they're using, doesn't work. It won't work. And this
Well,
is the
that's
guy
got
that
that's
this is
got to
the
make you
guy that
feel good.
is like one of the godfathers of AI, saying
That's got to make you feel good. All these hundreds and hundreds of billions, if not trillions of dollars are being invested in a model that will never work. That's got
right.
to make you feel good.
Yeah, he said 3 to 5 years it'll be obsolete.
Which,
And
yeah,
what he,
good luck getting a return on
by
that.
the way, what he said would replace it is not a large language model, which essentially is just data. I mean, it's what you and
No,
I sold at Splunk. We didn't
exactly.
call it we
Uh,
didn't call it AI when we were there. We just
no, we
called
called it
it
machine learning
machine learning and big data. That's
and
what we
big
called
data.
it. But it
Yeah,
would basically was large language models.
that's true. Yeah,
So it's
that's what that's
just
what we'd call it today. The thing would be AI today.
just a lot of data. But he said what's going to replace it is world training. In other words,
World
training
training.
the way that children learn by observation of what goes on around you in real time in the world,
Interesting. All
not
right.
not based on data.
Yeah, because data can be skewed. You can be echo chambered. You can be, swayed. Yeah,
Yeah.
all that.
Now I don't know
Yep.
how he's going to do that, but
Yeah.
that's what he
It's fun
said.
to think
That's
about.
yeah. By the way, let me share again because
Yeah,
on this
please.
topic, I want to show you one. It just made me think of one more thing that's in my newsletter. Yeah, my newsletter this week. Where's my newsletter? This one's interesting too. Percentage of annual closing highs by month. Look at December.
Wow.
That's highs, closing highs.
Yeah, I got you.
December is. Let me go back and find it. I guess I might have closed it. So showed you last week. I put all these other things in here,
Mm-hmm.
just little interesting things, snippets that I find during
Oh,
the
look at
week,
that. Yeah.
like this 1930. Where most people spent their time was with family. 2024 online. But the one I want to show you, this is all the gold in Fort Knox, and this is central bank gold purchases.
Yeah. Look at that.
Um, but there's one in here about where AI gets its data, which is basically a large language model idea. There's some real estate things in here too.
Mm.
Where can you still afford a home?
Mm-hmm.
Number one city is Nashville.
Interesting.
Percentage of adults under 30 with a mortgage in America's largest metro.
Mm.
Vegas is right here. Um, let's see. Where is it? Here we go. Where AI gets its facts.
Oh my God. Reddit. Oh, really?
Reddit. 40% comes from Reddit.
Oh,
Wikipedia.
you can write it off
YouTube.
now. Yeah. YouTube. Yeah.
YouTube. Google. Yelp. So
That's amazing.
when you talk about a large language model, which is what AI uses, it's nothing more than a huge data store,
Mm-hmm.
right? Basically think of the internet as your data store,
Yeah. It's a big database. Yeah.
right? So the internet has all the data out there. So it's just simply pulling from the data that's already there on the
Mm-hmm.
internet.
Of course.
And these are the sources that it pulls from.
Reddit's number one. I can't believe it. I'm not shocked,
So
but I can't
I
believe
can I can see where what he meant by in 3 to 5 years, this model for AI will be obsolete.
it. Mm-hmm. Yeah, I can too. Yep.
So
Yeah. Okay.
it's going to be very interesting the next couple of years, heading into 2029 when everything falls apart. It's going to be interesting.
It'll be interesting if that call you made 4 years ago proves to be right on. And hopefully we'll still be talking every week because that'll be fun.
Yeah, well, the whole economy hasn't crashed by then. We should be. Let's see. What else do we want to look at?
Why don't you look at
Um,
Bitcoin? Bitcoin crashed below 100,000. What the heck is that? Is
yeah,
it
Bitcoin,
95 or something?
Bitcoin. Let's look at it this way.
Ooh, that's an
So,
ugly
in
chart.
fact, it's going down again right now today.
Yeah.
It went up after hours on Friday, but it's starting to go lower again. So
It's
yeah,
broken
it
through everything.
was on Friday. It closed at 94.5. Right
Mhm.
now, it is at 94.9, so not far off
Yeah.
the close. It probably is going to continue to go down. Next week is options expiration week.
It's a pretty
Um,
weak chart, right? Looking at that.
that is absolutely a weak chart right now. It is definitely rolling over for sure.
Where's next support? Like 75,000 or something?
Well, it's already gone through this one, which is 98. 99
Right.
is what I talked about
Yep.
on my YouTube channel a couple of times. I said 99 is the key. If it goes through 99, then we're probably headed to 80.
80. Okay, 80. All
And
right.
80 is right there.
All right. Well, there
So
we go. All the
I think
Bitcoin
I think that's where
hosts.
it's probably headed to. The
80. Okay.
other the other interesting thing that was in my newsletter also.
Hmm.
Why do I keep losing my newsletter? Here we go. Um, every week I put a chart of the for the week the top 10 large cap gainers and losers,
Mm-hmm.
winners and losers, and look at the number one winner was Eli Lilly up 11% for the week.
Wow.
Number one loser was MicroStrategy.
Yeah, I wonder what's going on over there at MicroStrategy. He's got to be levered up to his eyeballs, I would think.
Well, yeah, he's levered up, and we've talked about this before. I mean, at some point, if Bitcoin continues to crash, his whole model is going to fall apart.
Mm.
I mean, I don't think that. I think it has a ways to go. I think it's like 60,000 is where it really just everything falls apart.
Where the pain builds. Yeah. Okay.
But before then, as it continues to fall, I think a lot of the people that bought into his strategy are
Mm-hmm.
going to
We'll
start
give
to
up.
want their money back.
Yeah.
They bought his bonds so that he could finance Bitcoin purchases.
Yep. Yeah, it'll be interesting.
Of course, he could talk to them and say, "Look, this is great. It's great that Bitcoin's going down. I can
Right.
buy more of it now."
Yeah. Didn't he get caught in the .com era as well? Wasn't he the
Yeah.
CEO of some .com company that blew up?
Um, well, he's the CEO of MicroStrategy,
No,
and
but I'm
I
talking
think,
.com era, 20 some years ago.
yeah, I don't know. I'd have to do the research on that. I'm not sure about that.
Well, you keep talking. I'm going to look that up.
All right, and look also. So these are the bottom 10 for the week of large
Hmm.
caps: Oracle, Intel, Zscaler, Tesla. They're all in the bottom 10.
Hmm.
AMD's in the top 10. Cisco, interestingly, is in the top 10 too, number two, actually. And Eli Lilly has just been on a tear, just continues to go up because of the GLP drug that it has. They just announced they're going to have a pill version rather than an injection version. Then what I like to do every week is I take the number one on the top of the list.
Hmm.
So this is
So
all
I just found the issue real quick. Michael Saylor was heavily impacted by the .com bubble. Uh, MicroStrategy, so that company, in March 2000, stock
okay.
plummeted after the company had to restate its earnings due to accounting scandal where it
Mm-hmm.
overstated revenue.
Right.
Yeah, so
Yeah,
he
they
got
were doing
caught
it
up in
back
that.
then too.
There you go.
Same thing that's happening now.
Well, I don't know that he's overstating revenue, but
Right. No, but
yeah,
I
it's
mean,
accounting shenanigans.
accounting gimmicks.
There you go. Accounting gimmicks.
So one thing I do every week is I take the top and the bottom of the large caps.
Hmm.
So large caps means the S&P 100 and the Nasdaq 100.
Okay.
So whatever stocks are in those two.
Nice.
So I take the top one, which is Lilly, and the bottom one, which is MicroStrategy, and I chart them side by side.
Oh, nice.
So you can see here's Lilly on the right,
Just
and here's
shooting higher and
MicroStrategy
rolling
on the
over.
left. Yeah, that's a weekly chart. And then I do the
Yep.
same thing with small and mid caps down here, with a chart for those.
Okay.
So that's not looking great. The market in general, and I talked about this. If we look at the S&P, I'll do it this way. S&P is it's still in an uptrend. So the market is not broken.
Okay.
We talked about this offline before we started.
Yeah. So
It's
some
not broken,
stocks are broken, but not the market.
right? So well, some stocks, but
Yeah, some.
the stock market in general is not broken.
Okay.
If we look at
Good
this
to know.
on here's a weekly chart.
Yeah.
It's this pink line is the 8 week moving average, or the 40-day, basically 40-day moving average. It has not closed below this line since the April low, right
Mm.
here.
Okay.
All right. And last Friday, in fact, on my YouTube, which I do during usually at noon, and it was below it at noon. I said, if it stays here by the end of the day, it'll be the first time since the bottom in April
Hmm.
that that's happened. It didn't. By the end of the day, it went back up. On this Friday, same thing happened. It went below it, but this time, right from the very beginning, right, basically from the open. As soon as it opened at the bottom and it went all the way back up.
Mm.
You can see it right there.
Yep.
Open way down here, and all day long, it just buyers
Went
came
back.
in. So buy the dip, buy the
Yep.
dippers, or buying the dip again.
Got it.
And that I think what we're in right now is a Wyckoff distribution pattern,
Okay.
which I talked about in December of last year, December and
Hmm.
January,
Yep.
just before the February sell off. I said that was a Wyckoff distribution phase where the market had a big run higher, and then it bounces up and down, going sideways.
Mm.
And one of the things that I've heard from a number of people, either in articles or on YouTube, is this market is confused. It doesn't know what it wants to do. One day it goes up, the next day it goes down. It doesn't know which direction it wants to go in. That's a typical reaction of a distribution phase.
Mm.
It goes up and down. And so right now, I think we are in a distribution phase, and we are going sideways right now. And this sideways pattern could ease, and I still think we're going to hit 7,000 by the end of the
Mm.
year.
Okay.
This sideways pattern could easily last for 2 more months into January.
Well, the other thing to tie back to something else we talked about earlier, we have two catalysts this week that could go either direction, right? Obviously, the NVIDIA earnings we've hit a couple of times, but also talked about the jobs number.
Right.
Both of those have the potential, again, just potential, to prick this thing and send it lower if they're really bad.
Right. Yep.
Is that fair?
It's absolutely fair, and especially the jobs number, because if the jobs number comes in much worse,
Mm-hmm.
and I think last time we talked, I said about this, I think I said 4.5 is
Yeah.
where it could come in at 4.5 on the unemployment rate.
Right.
That I think may cause the Fed to cut by 50 in December.
Mm-hmm.
But cutting by 50 is the wrong reason to cut. Usually you think cuts are going to be good for the market,
Mm-hmm.
but it
Yeah.
depends on what the reason behind the cuts are. So interestingly, notice that the big blank space here now.
Yeah. Big gap.
Yeah, because we don't have any data.
Well, you heard Goldman Sachs and ADP last week. Both companies come out saying we've lost. ADP said I think it was lost 12,000 a week, and Goldman said lost 52,000 for the month.
Right.
Negative job growth.
Yeah.
Both of them calling negatives.
Yeah. So I think the jobs number will be negative. I think the unemployment rate, you can see 4.3 is what it was last time.
Mm-hmm.
That's the key. If that goes to 4.5, that's
Big move.
acceleration.
No, it's
And
absolutely acceleration, and it's above Fed target. All the Fed folks looking at the dot plot said 4.4 would be the peak.
right, that's right. Yeah.
So yeah, buckle up.
So I did a meeting here in my community yesterday, and we're talking about this. And this one lady goes, "Well, if the Fed cuts, isn't that good? Doesn't the market
Mhm.
like that? Isn't the market going to go up if the Fed cuts?" I said, "Not if it cuts for the wrong reason.
Right.
It's not just the fact that they're cutting; it's the reason behind the cut."
Yeah, and I got to tell you, if they cut a quarter, probably not much of a reaction. But if they cut
Right.
50 in a surprise move,
Right.
that really does send a warning sign that we're scared.
Yes. Exactly. What's the date of that Fed meeting? Do you know?
17th,
20
I think. I thought it was the
17th.
16th,
So,
17th. I
the
thought.
week before Christmas.
Correct. Before Christmas. Yes.
Right.
Yeah.
So we could have a negative Santa rally
Maybe.
this
Maybe.
year.
Again, yeah, we've got some. And to your point earlier today, we're going to get two jobs numbers. We're going to get this one, and then the one on December 5th, I think it was. So,
Right.
um, the Fed will not be in a fog. Remember Jerome Powell saying, "Well, hey, if we're in a fog, we should go slower." There will be no fog. The fog will be lifted by the next Fed meeting.
Yeah, the wrong way.
Yeah, well, it'll be lifted either way. The other thing to think about, I don't know if you've thought about this. Maybe it doesn't hit your radar, but obviously the government is now open,
Hmm.
but it seems like it's a very stopgap measure, and we're going to be right back at this at the end of January sometime.
We could.
Uh,
Yeah.
I don't
Yeah.
know.
A couple of things on that. Contrary to what the mainstream media likes to talk about, the part of it is the renewal of Obamacare,
Mhm.
or the Affordable Care Act,
The
ACA.
subsidies, yeah.
Right, because those expired, and mainstream media likes to blame Republicans for letting them expire, but the Democrats designed it that way.
Yeah, the Democrats created it, voted for it, did it
They
all
they
without a
they,
single
they
Republican vote.
specifically designed it to expire
Hmm.
this year, so
Yep.
it's all on them to do something. So we'll see. And the other point, and not to get too political, but I just think it's
Too late.
really funny when the shutdown was going on, and a lot of mainstream media folks were shouting about Trump having to stop, to end the shutdown. Trump needs to end the shutdown.
Yeah.
Right after they came back from a No Kings rally.
Yeah.
How
Yeah.
ironic is that?
There you go. There you go. Well, let's get out of the politics, Eric, because we just pissed off half the audience. Um,
That's
and the
okay.
other half loves you. So I guess the last thing to talk about is consumer sentiment. You had it right there. It's at the second lowest ever. The only
Yeah,
time
we
it was
talked about this
lower.
last week, and there was an article posted about consumer sentiment, how it was dropping off a cliff. And I replied with what I told you last week, that consumer
Mhm.
sentiment will never ever come back again.
It's
It will
it's it's
never
a
be positive again
biased. It's a
because of
biased.
because of social media.
Yeah, I think there should be some PhDs doing some research on this because I agree. Like your conversation last week was dead on.
Right.
I'm seeing more and more what I'll call sentiment surveys all
Hmm.
being negative because they just live in this echo chamber and it's
Right.
now useless
And
to look
and
at.
not only that, and you and I know more than most, I think, what within that echo chamber that
Mm-hmm.
is social media,
Mm-hmm.
regardless of what social media platform you're on,
Mm-hmm.
what is it that drives engagement?
Negativity. Negativity.
Negativity. And
Exactly.
YouTube, you know,
As well. Yeah.
channels,
Yeah.
you see it all over the place. They
I
post
do.
negative headlines to get people to click on it and go read it. And that
Yeah.
echo chamber is what causes consumer sentiment. So
There you
it
go.
will never be positive. I
Yeah.
don't think it even should be a thing anymore.
No, I think it will be I guarantee you if I was econ grad again, I'd be studying this because I'd be writing my PhD thesis on this.
Yeah, absolutely.
It's a good thing to look at. So let's wrap this up. Again, next week's going to be important. Give us your website one more time and we'll see what happens.
BreakpointTrading.net. You can find the YouTube channel, which I do try to do every day around noon while the
Eastern.
market's open, Eastern time. Yeah, and I usually when I do it, I will announce the time
Oh, cool.
whenever I start it, because
That makes sense.
sometimes I'm doing stuff in the morning and I don't get to it till 2 or whatever.
That's
So
fine.
I'll let everybody know what time it is. And then the newsletter is there's always lots of really good information in here, including some real estate related stuff.
Mm-hmm.
So I try to get this out every weekend. Just got it out today, this morning.
Yeah, Sunday still counts.
Really good one this week. Especially it was ironic that it all had to do about the accounting gimmicks that you suggested we talk about.
Yeah, I think it's a big deal. Again, I've lived through this. I was in the boardrooms making these decisions, and I'm like, I know exactly what's going on.
Yeah.
So we'll see what happens. Dan, you're amazing, buddy. Take care. We'll talk next week.
All right. Have a good weekend.